Welcome back. These are the key points for controlling overhead management. Over the period of time, we learned a lot of points last couple of lectures, and this content is designed by myuuk.com. In these key points, I'll summarize whatever so far we have learned in a systematic manner. These are the important points to remember. Controlling module assists in tracking, analyzing the expenses per function, location, etc. If you remember earlier when we started this lecture, the whole module of controlling is about costing, how we expense, how we track, either by function, by location, by duty, by department, by division. This module is all about cost and its tracking and reporting. When I say reporting, it's more about internal reporting, like management reporting. So you remember, while talking about controlling, it's all about management reporting. Controlling component doesn't have an actual posting itself. It gets all the data from financial accounting, that is from our general ledger postings, day-to-day general ledger postings. All the actual data flow from general ledger to controlling. Secondary posting in CO are meant for allocation appropriate within the CO objects. Remember, we talk about secondary postings, which we allocate from one cost center to another cost center, or one cost object to another cost object. This is only meant for CO. There is no involvement of FI or general ledger, purely management reporting posting. Note the assignment control and its impact on currency type while maintaining controlling area. The reason I said it is important because when you start configuring controlling, it's just one-time activity. So you have to be very careful what you are configuring in controlling area. Let's see the screenshot. In this screenshot, if you see, there is assignment control. In this assignment control, there is option like company code or cross company code. When you see that assignment tab, assignment control, you see there cross company code cost counting. That means in this controlling area there are multiple companies, not just one. Currency type is 10 here, which is company code currency. In controlling setting, you have varieties of currencies available, like company code currency 10, 20 is controlling area currency, which is a standalone currency. So what does this mean? This means any company code currency you put there, any cost planning through company code, it will automatically maintain that company code currency. So that's what it means. If you type in company code currency, it will automatically generate planning, cost planning. Whenever you do cost planning for that specific company, it will plan in that company code currency. Then another key point, switch on the all currency indicator in controlling area. Why it is important? The reason, if we have multiple companies in multiple countries, probably will have multiple currencies. For example, Canadian will have Canadian currency, Mexicans will have Mexican peso, Indians will have Indian rupees, US company will have USD, British will have their GBP as a currency or euro. So it is very important, if we have a multiple companies assigned to a controlling area, it is very important to note that we need to check mark. If you see in the bottom other indicators, there is all currencies. So what will happen when you check mark that indicator? It says that allow posting or allow cost planning in any currencies. So if you don't check mark that currency, all currency, and if we saw that earlier screen, let me go back. In this screen, if you see currency type 10 and currency is Mexican peso. So what will happen? It will only allow you to post Mexican peso, even if you are in India, even if you are in Canada, which you don't want, because you want all company code currency to be able post their cost planning. So that is the importance of checking that tick mark, switch on all currencies indicator. These are small points but very important. Few other key points. Note the relevance of various price indicators. If you remember in the demo, while setting up controlling area, we had price indicators for plan and actual, which has periodic, average, cumulative in plan version maintenance. Let's look at that screen, how it looks like. Here it is. Planning. We have copying allowed, integrated planning, then we have exchange rate type, then value date. What does it say? It says if we are planning on particular date, it should consider that date exchange rate. So which means any cost planning with the beginning of the year, any transaction. For example, we have companies in Canada and we wanted to do whereas the head office in US. So when we try to report in USD on that Canadian company, it should convert that cost planning based on this exchange rate type P on this date. So whenever we have actual versus plan, we have comparison. We don't want our cost planning to fluctuate every day. We want our cost planning to static. That means throughout the period it remains same. So that's the significance of exchange rate and value date. Here if you see, there is another indicator says integrated planning. What does that say is that when we check mark that integrated planning, it automatically transfer data from other modules like sales and operation planning. All the planning data will be integrated together. Some companies prefer to do that way. If you have planning data available, some companies try to do manual planning. So it depends on how companies want. I was talking about this price, method, actual, revaluation. So these are couple of options: average price, cumulative price, periodic price is available. So based on the company's requirement and company's policy, how they wanted those planned costs to be posted in cost planning or in different controlling modules. So in this case I have selected average price. Some companies may want it cumulative price, or some companies may want periodic price. So it's up to the company, but you have to be careful what options you are selecting. So the importance of value date, integrated planning, and those prices is as much as importance should be given, because these are the things which matters. This is one time setting. You don't go back and change it again and again. Few more key points. This is I like primary cost element versus secondary cost element. You should know who are the primary cost elements and who are the secondary cost elements. Distribution and assessment as the basis of allocation. Remember we talked about on our demo last lecture. I don't remember what lecture, but yeah, in that demo we saw how distribution and assessment works. For example, if we have to have one cost center which is primary posting from GL account, that is expense account, transfer to our primary cost element, and we wanted to, and it posted to one cost center, because when we post, we actually post on, for example, marketing. So we had marketing expense of $1,000, but we know in internally we know that okay, that marketing expense belongs to 4 different departments. So we wanted to bifurcate that, or we want to allocate that. How you want to do that? Do you want to use a distribution method or assessment? There is no right or wrong method here. Both methods are equally equipped to deal with different situations. But most companies prefer assessment over distribution. The reason is simple. In distribution, you have to refer back always to the sender. For example, if those $1,000 spent by marketing belongs to 4 different departments, each time you debit or credit. To debit or credit. So each time you have to refer back to the marketing department, the original cost center. But in assessment, you just take out that original cost center and distribute, that's 4, only those 4 entries. Whereas in distribution there might be 8 entries. The line items will be more. So to avoid those line items, companies prefer to only avoid line items. There is no other advantage. It will increase your database. It will increase your database, like the gigs, the MBP, the MBs, the terabytes. So that's the reason large companies, with heavy data volumes, they prefer assessment over distribution over the period of time. I have seen in my experience. Flashback, all key points. If you see here, controlling module assists in tracking and analyzing expenses per functional location. FIGL feeds the controlling component of SAP with actual postings. Secondary posting and costs are meant for allocation appropriatements with the CO objects. The assignment control and its impact on currency type while maintaining controlling area. Switch on the all currency indicator in controlling area. Note the importance of value date and integrated planning in the plan version maintenance. Note the relevance of various price indicators, periodic, average, cumulative in plan version maintenance. Primary cost element versus secondary cost element. You should know the difference. Distribution and assessment as the basis of allocation. These are the few key points from this lecture. I hope you guys enjoy this controlling. And this is it about key points for controlling overhead management. If you guys have any questions and queries, you guys can always message through messaging services. Again, this content is designed by myube.com. Thank you.